Hi there, Peter Russell here at Supertax. Welcome to another one of my video blogs. Today's video blog topic is going to be on the basic personal exemption here in Canada. What is it and where is it? I'll start with what it is first. Well, it's a non-refundable tax credit that's eligible to a Canadian resident who files a Canadian individual tax return. It's the very first one, and its federal thresholds are $10,527, 2011, and the tax credit would be 15% of that amount. The provincial threshold, and I'm going to use Ontario as an example, is $9,104 in 2011, and the tax credit would be 5.05% of that amount. Now, where can you find these tax credits? Well, for federal purposes, it's located on Schedule 1, Box 300 of your Canadian individual tax return. And for the Ontario tax return, it's located on Form ON 428, and it's Box 5804. Now, I'm going to give you an example of how this works. Say in 2011, I earned $9,000 gross and net income. Say my employer withheld $1,800 income tax source deductions and remitted to CRA. Now, when I file my 2011 personal income tax return, I will be eligible to receive all my income tax withheld back as a refund because my $9,000 gross and net income is less than my federal threshold of $10,527 and my provincial threshold of $9,104. I can't get back more than tax paid. So although the tax credit is a little larger than my $1,800, I'd still only get back $1,800 because that is what has been withheld. Now here's another example. Say if I have a wife and I file jointly as spouses with her for income tax purposes. Say she has no income. She has no use of her basic personal exemption. Well, in that case, that can go to my advantage to help me reduce my taxes. So what happens is I get my own basic personal exemption of $10,527, and if she has no income, that number is transferred to my return. It goes on a different box, so it's box 303, your spousal or common law amount. So her basic exemption would be added to my non-refundable tax credits to help get more tax back. Now, what if you're a non-resident of Canada and you're filing a Canadian individual tax return? You are not entitled to a basic personal exemption unless substantially or 90% of your income on your return is business or employment income related to Canada and not treaty protected. That is the only way. Otherwise, you don't have your basic personal exemption. Now, what if you're a part-time resident of Canada in 2011? For example, you're a resident up until June 30th, 2011, and then you were a non-resident the rest of the year. Then you're a part-time resident and you had some Canadian income you could offset with a basic personal exemption. You have to prorate the basic personal exemption for the amount of days you were a full resident in Canada. So in that example, you must cut the basic personal exemption in half. That's all you'd be eligible for. Now, I hope you found this informative. This is meant to be a general understanding in nature, but if you have any questions, just leave them below, or you can give me an email at peter@Supertax.ca, or you can check out my coordinates on my website, www.Supertax.ca. Thank you very much.